Let's talk about Tesla and how they're currently doing as a company. Even if you don't own a Tesla or want one, if you invest in stock funds, there's a good chance Tesla is in it. Before we start breaking down the latest news, I want to disclose to you guys that I own Tesla shares beyond the S&P 500. For the better part of a year, I've had about 5% of my stock portfolio invested in the company. So keep that in mind when forming your own opinion on what I say moving forward. The last time we checked in on Tesla, they had just made the strategic move to partner with Ford and a few other car manufacturers to bring Tesla's charging technology to all participating EVs. I was super stoked about this because I had been saying for a while that Tesla is in the position to dominate the market for charging stations, at the very least across North America. Not only are they the furthest in developing a charging network, but they are also the only manufacturer that keeps charging services in-house. The other EV manufacturers have been relying on third parties. This was all concurrent with Tesla's price war in both domestic and international markets. Some interpreted the price drops as a sign of weakening demand, and others saw price drops as means to pressure Tesla's competitors further into net losses on each vehicle they made. Tesla has been able to aggressively slash prices because of their huge margins. At almost every point in the last 13 years, Tesla's margins have crushed those of their competitors like Ford and GM. And the comparisons are even worse if you factor out non-EV operations. Ford and GM continue to take losses on their EV divisions as they struggle to streamline their supply chains and make vertical integrations to fight the high costs of EV materials. So whereas Tesla can lower prices and still turn a profit, other manufacturers will have to go deeper in the red just to compete. And here's why I mainly think Tesla's price war has been so successful. Tesla has always commanded the majority market share for EVs, but with their status of being a luxury brand, and the price to prove it, the door was open for other manufacturers to enter the space with more affordable variety. That is no longer a selling point for other EV makers. Tesla's price cuts have made it to where a Model 3 can be purchased for $35,000 if buyers leverage existing government incentives. That isn't exactly cheap, but keep in mind the average new car price is about 48 grand. What was once out of reach luxury is now more affordable luxury. That puts a tremendous amount of pressure on manufacturers who never had the luxury branding of Tesla and are now losing competitive pricing to entice customers on a budget. I know a lot of people are concerned about the toll Tesla's price war will take on its margins, but I'm not too worried about that. It's a pretty standard progression for a company to lose margin over time in competitive industries. And the lower margins are worth it if Tesla continues to grow revenues better than their rivals and sees gains in global market share. Some other fairly recent news was the reveal of the revamped Model 3 body. From outside looking in, the new aesthetic looks great. Definitely an improvement. The new design brings the sleek style of the Model S to the 3, and it was a smart move by Tesla. One of Tesla's weaker points is the lack of variety in their EV lineup. There's not many options for customers to choose from. Sure, there's different trim levels and software packages, but people's aesthetic preferences are pretty dynamic. So the new body is a breath of fresh air. In more recent news, Tesla's Dojo Supercomputer and its potential to leverage AI for automated driving led Morgan Stanley to upgrade Tesla stock, which has slowly climbed back from a rough year. I'm pretty skeptical when it comes to self-driving tech, and not because I don't think it's possible, but because I can see the Pandora's box of laws and regulations that could stall the actual implementation of self-driving on a global scale. So if I had to pick between investing capital in self-driving tech or longer range vehicles, I'm going with the longer range every time. But with that said, the stock is loving AI. That doesn't mean everything is sunshine and rainbows. There's still some major challenges ahead for Tesla, and one of the biggest is China's BYD. They are quite frankly the only other EV player that gives me pause because of how damn dominant they are in that market. China is the world's largest EV market, accounting for 59% of all EVs sold, and BYD happens to make 5 of the top 10 selling EVs. Everything I said earlier about Tesla's competition with domestic EV makers doesn't necessarily apply to BYD. Whereas Ford and GM face an uphill battle for market share, BYD already has majority market share in China. And where US EV makers are struggling to profitably provide low-priced vehicles, BYD has offerings as low as $10,000. Again, one of Tesla's advantages over their domestic competitors is the vertical integration. They have in-house assembly, software development, charging stations, and even a vertical in sales, which is selling direct to customers. But you know who's vertically integrating as good, if not better? That's right, BYD. The company has made all of the vertical integrations Tesla has, but where BYD is shining right now is in the production of batteries. They're providing tons of car manufacturers with their batteries as groups like Toyota enter the EV race. This is not only generating revenue, but is positioning BYD at the top of a major supply chain. All of this has resulted in a huge year for BYD's stock price. Their latest financials were extremely impressive, with a 200% increase in profits and double-digit margins to rival Tesla. They're doing what Ford and GM can't. They sell an affordable electric vehicle at a profit. I make that sound simple, but it's anything but. So all Tesla investors should be watching BYD very closely. Tesla has quality issues, plain and simple. They've had this issue for quite some time, struggling to maintain a high level of build quality and putting out problematic software that is impacting the consumer's experience. The company has been plagued by recalls over the years, and although many have been due to integrated software, there's more serious instances of things like faulty seatbelts and battery fires. Whether the quality control issues are a byproduct of heavily automated manufacturing or the time crunch for getting these vehicles delivered to their buyers, it does not matter from the perspective of consumers. When I buy something, it either works or it doesn't. So quality issues are an absolute brand killer. And I have some anecdotal evidence about this. As some of you may know, I totaled my vehicle earlier this year and have been in the car market ever since. From all the research I've done, all the reviews I've read, and people I've talked to, the general conclusion is that car makers like Ford and GM are to be avoided at all costs because of one thing: poor quality. When you look at Tesla's brand as it is now, there's some conflicting associations with it. On the positive side, luxurious EVs that are synonymous with the words electrical vehicle, and now more affordable luxury. But on the negative side, poorly built and run by a distracted founder. Tesla's leadership in the EV space has far outweighed the quality issues and Musk's other activities, but that won't last forever. Tesla cannot allow its brand to be grouped with Ford, GM, and other car makers notorious for poorly built vehicles, not with companies like BYD breathing down their neck. A big test of Tesla's commitment to quality will be the Cybertruck. Because it's been delayed so many times, there's obviously pressure to finally get it to customers as soon as possible. But that's exactly when Tesla needs to reevaluate their process for mass producing these things. I can't imagine it'd be good if Tesla rolled out the Cybertruck after so many years, and it's instantly riddled with quality issues and recalls. As much as I would love to get into Musk and all the stuff going on with rebranding Twitter as X, I wanted to keep this video solely about Tesla. So that's all I have for the video. But what do you think? Is Tesla in a good place? Do you think BYD is a legitimate threat? Share in the comments. And as always, thanks for watching. Until next time, take care of yourself, and best of luck.